Alright guys, here we are again. Well, came here yesterday, talked to you about the PMIs from US. I actually missed the time. It was 11:45, it wasn't 10:30, because I was on the office and I was like, oh okay, that's fine, 10:30 I stayed. But then nothing was coming out, I was like, wait a minute, let me check this time again. And I was like, oh no, it's 11:45, so 1 hour and 1 hour and 50 minutes way lower than I was expecting. But that's fine, because I have the numbers here on my phone. So for those who don't know, my name is Luca Santos. I'm the Technical Market Analyst here at ACY Securities. The first thing I would ask you to is already subscribe to our channel, give us a thumbs up. We are doing some hard work to put free content to you guys. And if you have any questions, please just comment down below. I would be happily answering those questions. All right, yesterday we had the services manufacturing PMIs for US, as well a few other PMIs from Europe and UK. The consensus for the services was at 52.3. As I mentioned to you guys, I wasn't expecting much changes, right? I was expecting more changes on the services than on the manufacturing. Well, I was wrong, and I tell you, I was wrong. I'm not perfect. I do make mistakes, but it was very interesting because I wasn't expecting that at all. I thought, U.S. economy was on a strong path, and seems like we're not on a strong path anymore. So that means two things. Well, Fed has only one more rate hike to do, and then they will keep pausing. That's it. And what does that mean is that we can surf the wave of the strong US dollar for a bit more, maybe another month, and then we may have to start to switch our view towards the US dollar. Because the services PMI, the consensus was 52.3, it came 51, right? So 2.3% less than expected. The manufacturing PMIs came as well 2% less than expected. The consensus was 49.3, came 47. Right, so with that, I guess the Fed would take a little bit more, even more data-dependent approach, and they will hike one more time in next month, and then they will keep pausing until next year. And let's be honest, everyone says that the central bank is a liar. Well, this is not true, because Jerome Powell already said that in the beginning of the year. They say they've made very clear that the idea would be to hike rates until September, October, and then see how the economy is and pause rates, but they won't cut. And I do believe in them, they won't cut. They can't cut, first of all, and second, it's too soon, right? So we are not fully priced in on those rate hikes, and we need to give the market a little bit more room to sort of breathe out those hikes, and then after maybe 2024, second quarter, third quarter, maybe we think about cutting rates. But yes, we will stay higher for longer, right? We will stay higher for longer on US rates. So, for my opinion, and I make very clear, I keep bullish on the short term. This is what I've meant yesterday as well. I've kept bullish on the short term for US dollar, but I'm like that to catch this bearish trend on US dollar. You know, for those who was on my webinar, on Tuesday, I've mentioned the level of 104 on the index for US dollar, US index, dollar index. Oh my God, sorry. The dollar index, and we just got rich. So we were there, and now we're back to 103.5. All right. So just pay attention on those macros that are coming from US, because in the next 2 weeks, 2 to 3 weeks, will be very important for the Fed decision. Again, guys, please subscribe to the channel, right? Give us a thumbs up on this video. Share this video with your friend that may be a bit confused about what the Fed's going to do next. Now you know. Maybe pause towards end of this year and only one more hike. All right, guys, thank you again. This is Luca, and I see you in the next video.